Hello, friends. How have you been? For investors and traders who were watching the markets yesterday on 10 June 2022, you have seen the US markets being down badly pursuant to a news release of another record high inflation figure. Thus, the theory on whether inflation has peaked a couple of weeks ago again falls apart. However, you have seen that a number of Chinese tech stocks like Alibaba, Tencent, Pinduoduo has stayed above the support levels that I mentioned in my previous videos. This means that unless China adopts another aggressive rounds of city lockdown in Shanghai, Beijing, and other cities, the Chinese tech stocks may potentially hold above their respective support levels. But there remains a risk given that there is a major political event in October 2022, which we should remain vigilant for. For Tiger Brokers' latest set of results, I'm pretty disappointed as I think they could have made and delivered more and better results. I was in fact expecting a revenue figure of around 60 million USD and more, given that I have already expected that trading volume should be around or maybe even higher than the previous quarter. What has happened is that the trading volume did pick up a quarter-on-quarter basis, having edged up by around 6% in trading volume. However, commission revenue only increased by 2% quarter-on-quarter. As for other income streams like financing, servicing, fees, interest income, and other revenue fell anything by 24% to 48% quarter-on-quarter. The most significant impact is due to the decrease of other revenue, which is dependent on underwriting activities. There's also another component, which is foreign currencies exchange, and we're taught that there are less investment in US equities and Hong Kong equities given the downturn of US and Hong Kong market in 1Q 2022. I have to say that Futu is less dependent on other income streams such as foreign underwriting fee, given that it has a bigger paying user base as it was founded in 2009, which is 5 years ahead of Tiger Brokers' founding year, giving Futu ample time to build up to 1.326 million paying users. The extra 623,000 paying users by Futu give it the scale to realize a net profit margin of 35%. My read of Tiger Brokers is that a lot of its paying users have invested in Chinese tech stocks, which was also the reason why its customers' deposited value fell by 11% or 1.8 billion USD despite Tiger Brokers CEO mentioning that there is an inflow of 3.5 billion USD by its customers in 1Q 2022. Right now, I think the markets reacts badly for the results of Tiger Brokers is more of a result of the case that Tiger Brokers is very careful in terms of projecting the number of funded accounts to be opened in 2022, because it's only projecting at least 100,000 funded accounts to be opened, whereas in 2021, Tiger Brokers have projected over 350,000 funded accounts to be open. I was expecting at least 200,000 funded accounts to be open at Tiger Brokers. Naturally, as a result, the share price of Tiger Brokers fell by almost 20% on the day it released its results. My take is that given the recovery in Chinese tech stocks and its relative resilience compared to US equities, I do expect Tiger Brokers' customers' funded deposit could potentially reach 50 billion USD in time to come, maybe another couple of years when Chinese tech stocks recover to its all-time high, which is also possible. Current price movement may still be under pressure, so one has to watch out for the risk of Tiger Brokers in terms of owning their shares. I am a long-term investor of Tiger Brokers and do expect it to hit at least a 5 billion USD market capitalization, which is at least 30 USD per share, once Chinese tech stocks goes much higher compared to current pricing. However, one thing that I will always want to remind investors in Futu and Tiger Brokers is that you should continue to watch the risk concerning China take on online brokers. If you follow my video for long, you have realized that I believe QDII2 is good for renminbi internationalization, but viewers should still have an idea on the valuation of Tiger Brokers' international business in Singapore, Hong Kong, Australia, New Zealand, and US. At around 4 USD, I think the pricing right now is purely a case of the market being pessimistic and pricing only Tiger Brokers' international business at a significant discount compared to competitors like Futu and IBKR Interactive Brokers. If we are to use the price to book value metric for Futu and IBKR. Tiger Broker's implied valuation is anything from 1.1 billion USD to 4.2 billion USD. As always, this should not be construed as any investment or trading advice. Thank you.